Welcome back, investors, to Ticker Time News. I'm Adam, and here's the latest segment from the After Hours show. SentinelOne, ticker symbol S. Yep, just a single letter S. They recently IPO'd as the newest kid on the highly contested but very fast growing cybersecurity block. It's been under attack despite posting impressive upside Q3 results that featured triple-digit revenue growth and sequential growth margin expansion. Furthermore, the provider of endpoint security solutions issued strong Q4 revenue guidance that exceeded expectations, 60 to 61 million versus 56.5 million, illustrating that demand remains robust as organizations look to shield themselves from an onslaught of cyber attacks. Considering the company's exceptional performance, its weakness seems rather surprising. However, a pair of factors are clouding over the remarkable results and keeping a lid on the stock. Much like GitHub, another high-growth tech IPO that reported strong quarterly results this quarter, SentinelOne's astronomical valuation is counteracting any bullish sentiment arising from its quarterly report. Despite a near 40% pullback in the stock since mid-November, SentinelOne is still trading at a very frothy forward PE north of 60 times. That's just like GitLab's. Even for a company growing revenue by 130%, that multiple is just difficult to justify. It's also worth pointing out that SentinelOne's main rival, CrowdStrike, ticker symbol CRWD, is trading with a much lower forward PE of about 25 times. The valuation gap between the two doesn't add up. In my view, given that CrowdStrike is the leader in endpoint security space and is still generating 60% plus growth, compounding the problem for SentinelOne is that its IPO lockup period has expired, freeing up as much as 185 million shares of common stock to be sold. With a flood of new supply on the market and a potential catalyst now in the rearview mirror, the Q3 earnings report, investors are heading for the exits. This has kept a lid on SentinelOne's short-term performance. If SentinelOne wasn't facing these issues, the stock would likely be much higher right now because of its quarterly performance and outlook that depicts a company that's on the rise, bolstered by a combination of new customer additions and expanding usage from existing customers. Revenue jumped by 128% year over year to 56 million, while total customer count increased by 75% to over 6,000. What really stands out, though, is that customers with over $100,000 in annual recurring revenue, ARR, soared by 140% to 416. There's been some debate about whether SentinelOne's technology stacks up to that of CrowdStrike's, but the rapid adoption of its modulars suggests that large enterprises are quite confident in its capabilities. As work from home and hybrid work settings become more entrenched, the number of devices, endpoints that is, that need protection continues to climb. At the same time, workloads and data are increasingly moving to the cloud, adding another layer of vulnerability. These trends are causing corporations and governments to add new modulars, such as Ranger IoT and cloud workload protection, and to upgrade their service, pushing SentinelOne's net retention rate to a quarterly record of 130%. One area where SentinelOne needs improvement and has not compared favorably to CrowdStrike is margins. This divergence narrowed in Q3 as SentinelOne's non-GAAP gross margin expanded to 67% from 58% in the year-ago period. In comparison, CrowdStrike's non-GAAP gross margin for Q3 was 79%. That's a 12% difference in margin. That can equal a lot of money. Unfortunately, though, SentinelOne expects non-GAAP gross margin to slide back down to around 62 to 63% in Q4, which is the main blemish I see in its report. That would still represent a year-over-year improvement of around 8 to 9%, as the company benefits from increased scale in more favorable cloud hosting agreements. But the drop-off is disappointing, especially since gross margins have been a sensitive spot. Overall, business is very healthy for SentinelOne, and there's plenty of room for growth ahead. However, the company may need to still grow into its rich valuation, potentially limiting the stock's upside in the near term. With that said, what do you think about SentinelOne's valuation? Can SentinelOne improve its margins to compete with the likes of CrowdStrike? Let me know in the comments below. Happy holidays! Get 5 free stocks from Webull. All you need to do is click the link in the description, tickertimenews.com/Webull, sign up for an account, and deposit any amount. $5, $10, it doesn't matter. Any amount, and get 5 free stocks. Folks, that is free money during the holidays, and it's super simple to do. So click the link, tickertimenews.com/Webull, and get your 5 free stocks today. Have a wonderful holiday season, folks, and I will see you in the next video.